Hey, what's up, everybody? So first off, thank you for joining me. Secondly, 37 out of my last 41 trades have been profitable. And I understand you're not here to hear that shit. So let's get right into the lesson. Today's lesson, which I tweeted about, all right, be a winner. Now, somebody already, a naysayer, responded and said, what the F does that mean, be a winner? You can't just tell someone, be a winner, and that's it, and they're going to be a winner, and all of a sudden they're going to be a great freaking trader. Of course you can. This is my response. If you're a loser and you have losing trades day after day and you find yourself stuck in the same shit, enjoying the losing. Oh, I lost again, but today it was only $100. It wasn't 300. Oh, I lost tomorrow. I lost 500. Then you're going to be a loser every day. So here's the lesson. Back to my lesson. Be a winner. All right. Be a winner. And here's how. First, understand your goal. My goal is to make all of my trades winning trades. So whatever trade I enter into, I've got strategy. Now, if you're part of my platform, I tweeted out something this morning. It's not tweeted. I messaged out something this morning saying, here's my plan for my UVXY calls. It's a small account, so I can't risk it. I can't risk the UVXY going down. I can't risk certain things. So understand, first mentality is I want to be a winner. If I want to make $100 or $500 or $1,000 or whatever, that's my goal. And now I need to make up the strategy to make that achievable or obtainable. All right, so let's go back to the how, okay? Because I don't want to just tell you to be a winner. I want to show you how to be a winner. First and most important, you must decide on the market direction. We don't just enter into positions. Oh, I'm going to buy some Tesla today because Tesla looks down or some shit like that. No, first you analyze the market. Let's analyze the Dow. Let's analyze the NASDAQ. Let's see where the 10-year is. Now let's look at Tesla. Let's look at the 5-day chart, the 1-month chart. All right, you have to have an understanding why you think a stock is going to go in a certain direction. All right, so pick your stock. All right, you can pick the SPY if you want to play the market or an ETF or maybe a stock that might move extra hard. For example, I'll give you a stock that I said SMAR, right? I said yesterday it would probably go down like 7 or 8%, that they were going to look like shit off the earnings. Well, they tried to make their earnings look good. Some banks manipulated this morning and gave out price targets, raising their guidance on the stock, right? SMAR. Bullshit. It went down 14%. I said it was going to go down 7 to 8%. It went down 14%. So pick a stock. If you think tech is going down today, which I thought it was, I was picking a stock that if it went down, it would go down substantially. I would get a substantial return, 100%. All right. Next, you're close to being a winner once you do that. But next, once you pick your stock and you know the direction of the market, then you have to pick your strike price and expiration. But you're still not done. So you say, okay, I want instant gratification. I'll go out till Friday. All right. Then you say, I want in or at the money. So whatever the stock is at, you go, okay, Tesla's at 740 something. I'll pick the 750 calls because I think Tesla's going up because I think the market will rebound. All right. So now you've got strategy. You picked your strike. You picked your expiration. You've got a reason behind it. Okay. But you don't just buy the Tesla options. Now you look at the 1-day chart and you're like, oh shit, it's close to its top right now. I don't want to buy it right now because I'd be paying too much. So let me see if Tesla goes down to 742 or 743 or 740 like it hit today. And my options, instead of paying $1,500 a contract, I'll buy them for $400 a contract. Do you get it? So you have to have a strategy. Once you do, you have to decide when to get in. You don't just buy in at any point or else you're going to be a loser. And I'll tell you what I mean today. I took a very risky position and I know I'm going out of order, okay? So I might jump around. Today I took a risky position. I bought some SPY puts that were expiring today. End of business today. So I had to be right, okay? I bought them. I paid, when I first bought my first contract, the strike price was $450. So first of all, they expired worthless. Understand that, okay? So when I don't give out a play like that because they have a chance of expiring worthless, there's a reason. So SPY puts, $450. The ETF was like, what, $450 and like, 450, $150. That's where it was at. I paid $28 per contract on average. But first, I paid $40, then $39, then $34, then $29, and then I bought a shitload at $24 and $22. So if I alerted SPY puts and you bought into them, they'd be worthless. Now, here's the great thing about the trade, okay? The SPY took a shit on itself, so my average price was 28 cents. I exited out at 41 cents, making 47%. Like I'm the shit, okay? The point is, the same contracts I bought for $28 sold for $1.25 for a good portion of the morning, which would have been a 400% return. The reason I'm telling you this is because if I had gotten cheaper and I had waited and I bought my first contracts at $22, $20, $24, I have more or less limited downside. But because I spent $28, when it went to $20, I was already down 40%. Do you understand? So if you enter in at the wrong time, you're down 40%. So when I tell you, you better make sure you call the damn bottom if you're going to average down or buy calls. Or if you're calling the top of something, you better call the top correctly. All right, so back to being a winner, all right? You've got your contracts. You know exactly what you're looking for in the market, but now you need to execute. So you don't have FOMO. You put in your bid wherever you want to buy those contracts at on whatever sale. Now, as soon as your phone or your computer buzzes at you, you turn around and you say, okay, I want to make 30%. I want to make 40%. You set your ask price. Also, understand that if it goes down, you have a secondary plan. So with my SPY puts, when they went down, I said, I'm buying more at $22, at $23, at $21, knowing that instead of $50, I'll ask $41. Now, again, I could have killed it, but the point is I could have made profit selling for $31 all day, buying them at 22, selling them at 31 all day. And if you think of the return, that's like 40%. So I'm trying to give you winning moves. If you're a winner, right? Okay, never mind about that. All right, so let's talk about my positions from yesterday. I'm trying to give you guys context on how to be winning players. If you're a loser and you make losing trades every day and you do the same shit every day, history will repeat itself and you will be a loser tomorrow and a loser the next day. I want you to be a winner. It's as easy as that. You make a good trade, you call it a day. You're up $200, boom. You do the same shit the next day. You write it in your notebook. After a while, you're going to be a winning trader, winning mentality day after day. All right, so let's talk about my positions from yesterday, which I mentioned on YouTube. So the same people that watch me every day, I appreciate that, and hopefully you enter into the same place. This morning for my pre-market video, I spoke about Tesla was my tracker, and I thought the market was going down. So if you put two and two together and you say, Tesla's his tracker, market's going down. If the market goes down, which it is, Tesla will follow down. So it went from like 758 to like 740. All right, so put two and two together. So what did I do yesterday? I mentioned two larger positions and a couple smaller positions. Larger positions, UVXY calls. I sold them on open. I didn't need a spike more than 4%. 4% was great for me. All right, Apple puts. Yesterday, I mentioned I got out of my Tesla puts, right? When Tesla was 750, I made $8 on the way down. I made about a 52% return. I got into Apple puts, which I mentioned Apple looks strong, and it looks strong this morning and shit like that. If I didn't get nervous, now granted, I sold my $68 contracts for 38% profit. But if I didn't get nervous about having so many open positions, I would have got 100% on my Apple puts, $68 to $1.36. Easy. It hit like $1.50, $1.60. Could have made over 100%. But profit is profit. Feel like a winner. So now I got UVXY calls, winner. Apple puts, winner. Okay. Then entering yesterday, SMAR puts. I said it would lose like 7-8%. When it opened this morning, it opened at $71 per share. Now it closed at $70 per share as well. So if you got stuck holding it all day, you made out fine. But I was a winner because I sold my puts on open for over 100%. I got 167 and 227% on that call. And again, I posted that one on free Twitter. It's on my platform. All these things or these calls that I mentioned, how I'm on fire, I post this shit on my platform. If you don't have time to trade during the day, but you're on the platform and you catch up after the trading day's over, okay, you understand what my positions were when I entered in, when I got out. But if you're following it and you're trying to day trade and I make a trade, I will give an alert. Hey, I gave an alert. Now, a lot of people get these alerts. So the thing is, when I say alert, you go to the platform, you go to the last comment made. Most of the comments are mine. There is a community we started, but most of them are mine. And every time I announce something with a video or a lesson, I pin that shit for you guys so you don't miss it. All right, so the SPY puts I mentioned, SMAR, I mentioned that. All right, so here we go. SMAR. Why did I say that? So here we go. They missed earnings. which they didn't do. So they actually hit their earnings, and the analysts gave them up on the price target. Let's just skip that. I talked about Tesla. Okay, talk about the psychology of trading. This is a pretty important lesson here. Oh, man, I just killed off my screen. Psychology of trading. So how did I know the market was going to be down today? It's easy. We watched the direction of the market yesterday. So this is what I want you guys to get into predicting. So if I ask you guys, the people watching, what do you think the market's going to be like tomorrow? Tell me right now, because history repeats itself. So we saw the market try and sell off. It's not going to sell off. It's obviously not having a 10 or 15% correction. But the market could easily consolidate for a few days, just like you saw yesterday, just like you saw today, and you guessed it, just like you're going to see tomorrow. So let me tell you what's going to happen tomorrow. I'm in such a good mood because I'm seeing shit clearly. The volume's there. I'm on fire for like the past 3-4 weeks. I'm trying to give you guys that content, and I appreciate you guys watching. So here we go. Tomorrow, what's going to happen at open? Okay, futures. Who really gives a shit about futures? Because less than 1% of the volume is traded pre-market. Okay, so futures are here. As long as there's no major data or a major occurrence, earthquake, whatever it is, everything else stable, okay? The market will likely spike at open. We saw the SPY struggling at the end of the day to go up, and outflow went from outflow to inflow. But here's the thing. We're going to see the same thing we saw on Tuesday and today. So you'll get that spike at open, and around 10, 10:15, 10:20, all the way up to 11 o'clock, it'll play around, and then I think it will sell off. I think the market will go down tomorrow. All right. So I think I had one more lesson to add today. Let me just see. I do. I wanted to mention my small account. All right. Because people don't understand, or you do understand, but I'm going to bring it to life right here. I gave my nephew $500 for his small account on his birthday, which was like mid-July. My brother, because my nephew's only 11 years, he's like, 12 years old now. My brother traded the account from $500 to $129 and spoke to me and said, I'll probably trade it to zero. Can you help out? I took over the account at $139 or $129. I traded it up to $210, and I was feeling high and mighty. Okay, good direction. Here we go. And then I traded it from $210 down to $84 the next 2 days because it's tough trading a small account, and I'm not used to it. And I was wrong about the market one of those 2 days. So now I'm at $84. Fast forward about a week and a half now, I'm at $1,919 from $84 using day trades, using a cash account. So when I tell you small piles equals big piles, I'll explain. Tomorrow, I'm going to take that $1,919 and I'm going to make one play. That's it, just one play. I'm going to be in, I'm going to be out, and I'm going to be looking for $400 profit. I want my $1,900 and $19 to be $2,400 tomorrow. At any point, when I'm $2,400, I'm done with trading for that account. The next day, I will say, I hope my $2,400 becomes $2,800 on Friday, maybe $2,900. Then I'm done. You don't need to trade every day. You don't need to enter and exit out of every play. If you see something, you're like, oh, shit, I think this is going to go up. Yeah, it might go up. You might be correct. But if you don't have the strategy, you're not going to be able to get in and out. So that's the thing. You got to plan ahead. If you're going to be a successful trader, you got to do it. All right. Let me just see. Oh, by the way, Carlos made money on his SPY puts that I give out. Let's get to some questions. Half the time is gone. We've all got places to go. This has to be educational for everybody. So if you think you're getting some knowledge here, please thumbs up, subscribe. What's up, Matt? B-Big's still going to hit 13. Okay, so we know for 2 days I haven't had a position, and I sold my B-Big when I was transparent. I think I mentioned it yesterday. I was in at $7. I was out at $8. I made $10,000 on the trade. I had some options. I lost 10% on the options because I have paper hands and I suck ass. That was one of my losing trades, by the way. 37 out of my last 41 profitable. 4 losing trades. One of them was B-Big options. Yes, I made money on the other side, and I only lost a few $100s. But the point is, I'm transparent. Who loses money on B-Big? All right, so let me look at it. The point about B-Big is there were definitely manipulation going on today. Somebody sold off into B-Big twice when it was making a run. The outflow ended up being greater than the inflow. So the shorts are making their stance, all right? They're trying to win the battle, and they're trying today. They started today because before that, they didn't really give a shit. but 313 million volume and the stock went up 6%. That means the retail traders are winning. All right, so yeah, I like Be Big. Yeah, it's going to hit 13. It might even hit higher. I'm not promising it's happening tomorrow, but with the flow of today, I can tell you the shorts are not winning that fight. All right, let's go on to another question. And that's a current situation. If it changes, I will definitely let my platform know. If the shorts start winning and we want to figure that out and get the hell out, then I'll let you know. All right, Dan, let's see. Hi, Matt. Thoughts on UPSP? Piper Sanders changed their price target to 300, volume 1.4 million, up 4. Okay, so is it manipulation? Okay, so I'm glad you asked if it's manipulation. Everybody read that shit, okay? Because all I do is talk about analysts. When they give a price target, understand their big money clients, their banking investments, they already have the positions there. So this went up 4.4%. I guarantee they had call options. Their clients had call options. They had probably written puts on this. Yeah, so it's sneaky shit. All right, let's look at it. UPST. Let's see. UPST. Oh, it's Upstart, right? Yeah, of course. Yeah, no, Upstart's strong. Even with the sell-off today, because there was more outflow, volume was decent, and it still went up 4%. Yeah, I would put my price target at like 330 on this one. Why? Because it's going to hit 330. Now here's the downside, okay, of Upstart. Things that could hurt you, and this is me making predictions. I will get hurt through Upstart if the market needs to get hurt. The NASDAQ needs to fall 5, 6, 7, 800 points, and Upstart will have to go down. Now, how would that happen? Glad you asked, Matt. I'll answer it. All right. If the 10-year, if you see it spiking, and let's see where it finished up today. I'll take a guess. I'm going to say the 10-year finished up at like 135 and change. And it finished up at 134.1. Okay. So it's like 5 basis points away from 139. When the 10-year hits 139 or 140, tech will be in trouble. So when you see that happening, if it spikes tomorrow, I would not want to be an Upstart. But as long as the 10 years at 134, 135, 136, and Upstart still looks like it's going up like it is, you're very safe there. Now, the problem is when the market changes violently, you need to have, your, I guess your stop losses in place. That's what I would do with an expensive stock like that. Let's get another question, please. That is awesome, Bree. First of all, everybody is allowed to brag. I made an announcement on Twitter today, and I didn't give a fuck, man. I'm on fire. People should know that some douche, sorry for calling you a douche, he's part of the platform. He reached out. He's like, oh, you're on fire, but I'm still struggling, blah, blah, blah. I can only give you so much of the tools, and I'm not picking on anybody. But if the dude was actually watching, which I'm sure he's not watching YouTube because he probably wants everything spoon-fed to him, I give you all the clues. Pre-market video, I talk about Tesla as a tracker. I say I think the market's going down. Put one and one together. Tesla's probably going down. It's like if I'm bigger than Carlos and Carlos is bigger than Andy, then I'm bigger than Andy. It's a what? Commutative property, something like that. Bree, 10 days in a row. Favorite scalp spy. Everybody should have a favorite stock or ETF they like to play. You should learn it like family, and you should make money every freaking day. All right, let's go to another question. Okay, Starbucks is going to do tomorrow up and down. Okay. I mean, without looking, I can tell you that the market's been down 2 days in a row. Starbucks is a 4-letter stock, but also surrounding the Dow, which has been weak as well. So I would say Starbucks is probably going down tomorrow. But let's see what Starbucks looks like today. See, always make a prediction before and then see if you're right. And what's Starbucks at? 116, 118. Okay. Oh, is that went up today? Wow. Would it have a move? I guess it went up all day. Okay. I didn't know that. I would have guessed Starbucks is 116 and had an average day. So Starbucks is 118. Let's look at the inflow, 6 million. Nice spike. Now, here's the thing. If you look at Starbucks, every time it spikes like it does, now I'm looking at the 1-month chart, okay? It rarely has a second strong day where it repeats. So honestly, if I were going to make a wager on Starbucks, I would say Starbucks will go down tomorrow. And if it doesn't go down tomorrow, I would double up my wager that it will go down on Friday, okay? So that's it, because it hasn't had 3 inflow days in over a month. And even, I guess, pumpkin spice is coming back. I get it. You guys like pumpkin spice. Man, it's crazy how that shit happens. But I wouldn't be in Starbucks tomorrow. Hell no. I would be out of that one. All right, thoughts on Apple calls expiring this week. So everybody knows I was short Apple. So here's the thing. you have to watch the SPY. The SPY makes up the largest companies in the world, Apple included. Tech, obviously makes up, NASDAQ makes up the largest companies in the world, Apple included. So you're really asking me, what are my thoughts on tech? Because Apple will not go up. So I said yesterday on YouTube that there's more likelihood that Apple will go down and touch 150 and then rocket up to 180. But I don't think it's just going to trickle up to 180 the way a lot of people do. So let's look at Apple, AAPL, and there it is. The chart looks great, but if you look at the chart, again, it's looking kind of spiky on it. Let's look at the 3-month. Again, you're at a spike. You're coming down a little. Every chart you look at, whether it's the 1 month, 3 month, or 1 year at Apple, if you look at the chart and the end of the chart, which is today, it looks like it has a negative or bearish momentum. So yes, if you had your calls out a couple months, Apple will be $180. Same shit I said yesterday. Come November, December, Apple will be $180. However, Apple's probably going down to 150 first. So I don't like that position. If you had a chance to get out today, Apple could definitely have 2 or 3 down days. So we're already Wednesday. So if you put in tomorrow as a down day, just estimate that you're on the wrong side of this Apple trade, right? Throw it out there. What if I'm wrong tomorrow and Apple goes down? Then you have 1 day to make it up. So if Apple's sitting at 154, your time is being eaten up tomorrow and the price is going the wrong way and your calls expire this week. So you could lose like 60% of your value tomorrow. Now, here's the good thing. If we get a spike like I predicted tomorrow morning, market opens 9:30, boom, Apple 156. You plan ahead to sell your whatever they're worth now for 20 or 30% more, and you get out of that position, and you're like, I'll take a break even. I'll take a loss by $10. I don't even know what it is. I wouldn't want to be in that position. Let's get another question up there. So I hope you understand that. And again, it's just my personal opinion. I'm not a financial advisor. I look at stocks. I look at patterns. I use the psychology of trading. And this is for anybody who does not know who I am, who's just watching me for the first time. And I break down stocks. And then I say to myself, who would be buying or selling this position and why? Now, do they have any firepower to back it up? Like BBig today, when it was rising up to 1150, I went on my lifetime chat and I said, geez, this is a really weird time. The market's kind of beat up. I wouldn't be pushing BBig today. And then it went from 1150 over $12. But where did it end up? $10. Today was not the day to push BBig because the market was down. You need the market to be green. When the market's green, that stock can move like 50 to 60% on that day, if that's the right day. All right, Alvaro, I was going to ask me how I pick my positions. For example, why Tesla puts or calls, why Apple calls or puts. How do you call the bottom or top? All right, so I've got eyes, dude. I try and simplify it for you. Yesterday, when Apple spiked to 157, I was like, that spike is ridiculous. It looked like a freaking J. We all know what the letter J looks like, whether you're from this country, not, the English alphabet, a J looks straight up. Nothing goes straight up. Nothing goes straight down. So when I see something going straight up, unless there's crazy news out there being acquired or some shit like that, it tells me Apple's a little frothy. So if the market consolidates just a little like it did today, Apple touched 154 and change from 157 and change. That 3-point movement could have made you over 100%. Because again, my $68 options were worth over 140 per contract at one point during the day. Again, I only made 38 or 39%, but profit is profit. All right, another question, please. All right, what do I think about NIO calls? Oh, I think they're terrible. Why? Because NIO suggested they were doing an offering. Now, the offering usually takes 3 or 4 or 5 trading days to close. Now they said they're doing an offering at the market, meaning they are offering 50 million shares at the market current value. So if NIO is $38, they're selling some shares at 38. If NIO is 39, they're basically flooding the market with shares for the next couple of days, if not weeks. Okay. So this morning on my platform, I made a comment about the math on NIO. It was currently down like 2.25%. And I said, mathematically speaking, NIO should be down 3%. And there's a good likelihood today that NIO drops between 6 and 7%. All right. I think it actually dropped more at some point. My NIO puts, I forgot to mention, I bought some NIO puts this morning. I paid $61 a contract. I sold them for $88 a contract, which is what? Again, about 45%. Do you see the pattern? I get in, I get out. I know those contracts actually went for more money and I could have made more money. So every one of my positions today, I could have made a lot more money, but I do it safely, in and out. So let me look at NEO for you, because maybe I'm wrong and maybe NEO will kick some ass. However, I'm going to say probably not. Yeah, I mean, they were selling today. They were selling yesterday, and that's when they announced they were doing an offering. Again, they're introducing 50 million shares. The volume today was 50 million. So imagine they have to put 50 million shares on the market. Now, granted, they might sell some to an institution, but they're not selling all 50 million. So let's assume 10 million shares are to go on the market. They're flooding the market. It's going to go down. It's going to go down another 3-4% tomorrow. Yeah, I'd get the way out of those. All right, so NEO puts again. I obviously should have held them longer, because I'm telling you, snapshot it. NEO is going down tomorrow, somewhere between 2 and 4.5%. All right, let's get another one up there. Hey, Matt, I bought a put. Oh, you bought a put? Yes. Dude, okay. What should I do? Options, please. All right, you bought a put. So here's the thing. You paid $30. So I don't care about anything else. Here's the most important. You paid $30. Great for your put. You're looking to make 40%. So you take $30 times 1.4 and you get $12 out of that. So you go, okay, I paid $30. I want to sell it for $42. That would give me 40%. So I don't give a shit about anything else. I want you to make 40%. So when you tell people tomorrow, you go, man, I put it in the system. I paid $30. I put in for 42. It got hit at 10:42 a.m. I don't give a shit. The SPY puts I bought, I tweeted about it. I messaged about it. I took a snapshot from my phone, 12:17. At 12:58 p.m., I sold my position because my phone alerted me. I was watching a show, 47 minutes. That was it. I made 16%. So you do the same, buddy. Put in for $42 and get them out of them. You make 40%. All right, CCI, 190 puts, 85. Usually dips at open, hard planning on selling, then buying, riding up, looking for outflow. Okay, yeah. So Diego, same thing. You paid 85 cents. Say you want to make 30% on that, okay? So you say, okay, that's 25 cents. I'll sell those for $1.10. That's all you need to do is say, I'm going to make 30%. I'll make $1.10 on I'll sell them for $1.10. Now I actually look at them and see what the chart looks like. But that's the thing. We trade without emotion. We trade with numbers. If I pay $85 for something and I think it's a good deal and I want to make 30%, I add 25 cents, $1.10. If I want to make 40%, I add another 8.5 cents. I would sell it for $1.20. So yeah, there was inflow today. You're hoping the market gets beat up tomorrow. Now here's what you do tomorrow. At 10 a.m., you check this stock, the 1 month chart for this stock, CCI. If it has outflow, meaning if you see red, okay, in that little thing, because that'll tell you the volume. If the volume is red and it's outflow, you're okay to hold it. If the volume is inflow and it's green, like today, you would have noticed that this morning. And if you notice this morning, there was heavy buying at the end of today too. I'd be very careful on those puts. Yes, I would try and get profit. So if I didn't think I was going to get 30 or 40% on this and I didn't like the position, which I don't, Diego, okay? Understand, it might be a good position, but here's a safeguard. Tomorrow morning, pre-market, you put in the sell order for 95 cents, okay? When the market opens and the stock goes like this, an algorithm or computer will buy your options for 95 cents, implying a 12% gain. So anytime you're in the wrong position, it doesn't mean that you scare sell or just lose the position. You still do the right thing. You still think about it. Let's get to another question. I think we got 2 more. By the way, everybody, please thumbs up on this. Man, no one gives me thumbs up anymore. I'm trying to give you guys value. I'm not talking down to you or anything like that. I love you. Please show me the love. Share the video with someone. Be like, yo, this dude's on fire again. You should hear what he has to say. And tomorrow, we're going to talk about stocks. Tomorrow is Thursday, right? I think I'm right about that. And then tomorrow we'll talk about stocks because I'm not here on Friday. Thank you, someone, for giving me a love. But here's what we're going to do. Talk about stocks tomorrow so we can talk about good shit or bad shit going forward into Friday so we can all make Friday a winning day. And when we make it a winning day, that means we make the weekend, we feel like winners. And if you feel like a winner, that's great. All right, how do I pick plays for your small account challenge when you have little to invest but great returns? You understand, smaller accounts, you have to be damn right about it. So when I buy in some SPY puts or UVXY calls, I better be correct about it. So whatever your position is, 1 contract, 2 contracts, 3 contracts, you know how to invest, but you better be right. So if you're calling the bottom of something, you better make sure it's turning up because if it throws up and you're wrong, it's better to play momentum play there. All right. So yeah, I'm going to share that. I got other people with questions. You just got to ask them. What are my ETF symbols do I watch? I watch the 10-year. I watch the SQQQ, the SDOW, UVXY. I don't watch the VIX. All these things should be on your watch list. Listen, I know Carlos has to run. You guys are great. That's it for today. I will be back tomorrow. The more people turn out, the longer I stay. This is excellent. By the way, I love my family. You guys are great. See you later. Carlos, get out of here, buddy.